Hello and welcome back to the show. Welcome to World Wild Economy, the podcast which lies at the heart of monetary policy, capital markets, and the radical candor. Here I turn madness into musings, and over the past week, what I'm going to be discussing is Tesla purchasing Bitcoin, the Dogecoin rally, how Amsterdam has surpassed London as Europe's trading hub, as well as kind of mentioning quickly the Bumble IPO. And we're going to get stuck in. So I'm going to gloss over the Bumble IPO and how Amsterdam European trading has increased substantially over the past month. I'm going to kick things off with the Bumble IPO specifically. So Bumble is essentially a dating app which IPO'd very recently, and it increased 70%. I think it was 72% on its first ever trading day. Right. And I believe the CEO, the founder, she became the world's youngest female billionaire, self-made billionaire at the age of 31, which is great news. And there's obviously a lot of hype around this. But what I see that's problematic about this kind of IPO potentially system or whatever is happening behind the IPOs is that the way that these companies get priced, and this comes with a lot of tech IPOs or businesses of other nature, it's essentially that they IPO and there's many gains to be made on the first day. And this isn't just the idea of like crazy trading on the first day that you have to buy and sell during the day. Otherwise, you're going to make losses at the end of the day. Like, no, these are firms which IPO, see an increase in its price, and that price increase sustains. So it just kind of showcases to you the misvaluation that investment banks or essentially the underwriters have caused. And actually this comes at the expense of the business, Bumble specifically, because they offer equity at a certain price, right? They go to these investment banks. These people value their business, and the company, the Bumble, for example, then sets an IPO price, right? The price at which it's going to offer a lot of its equity or, whatever amount of its equity. And so it's an interesting problem because, okay, you go to these investment banks and, you as an investor, for example, I can go to an investment bank and say, okay, the Bumble IPO, how much is it going to cost me? Well, really, their answer depends on whether you're wanting to buy or to sell. Because if you're selling, for example, from Bumble's point of view in terms of actually issuing these equities issuing this equity, that number is going to be a lower valuation than is then dictated by the market, who are obviously essentially buying this stock from the investment banks or from essentially buying the stock, right? So the investment banks come, they give a low valuation for Bumble, and they give a high valuation for those to whom they're going to be selling it later on during the market or at the initial public offering. And so this kind of difference, it makes you wonder, like, okay, is this a loss or is this a gain to anyone? Well, essentially, it's a loss to Bumble and any firm which gets robbed on their IPO, and it's a gain to whoever makes that difference, selling the stock onto the market, or onto the public markets later on, onto another investor, right? Secondhand purchases, whatever. But nevertheless, great news overall in terms of new IPOs, new businesses, etc. It has obviously been a successful IPO insofar as the positive news around the covering, but nevertheless, I'm kind of observing it, with a pinch of salt, let's say. Moving on, Amsterdam surpassing London as Europe's trading hub. Essentially what happened is that this is actually pertaining to European shares trading. So this isn't trading as a whole. This is in regards to European equities and European securities specifically. What happened is that London, or actually we can look at it from Amsterdam's perspective. So Amsterdam saw a 4 times increase on its European trading volume during January, as opposed to which it had in December. 4 times. I think it surpassed somewhere around over 9 billion euros potentially. I think it was a day. That doesn't sound right necessarily, but nevertheless, it surpassed that of London. And this comes at the kind of consequence of the Brexit agreement, or specifically the lack of, because Brexit obviously happened at the beginning of this year, January 1st, the UK finally left the EU, and with that came the severance of a lot of its laws and regulations. Specifically, even though the Brexit exit agreement, Britain's exit agreement did cover, for example, goods trade, to a certain extent. It didn't necessarily cover services trade. And because of that, to continue trading European equities without any problems as it pertains to overseas access, because now the UK is technically overseas, geographically always has been, but nevertheless, right now there's problems when it comes to regulations. The point is that because of this exit agreement, London-based, city-based, UK-based investment managers of firms had to set up subsidiaries in, for example, Amsterdam, to continue trading European equities and European, essentially, securities. So this comes, again, at the expense of London and at the game to Amsterdam. But then you have to beg yourself the question, right? Even if Britain does secure a certain agreement in the future, which covers these securities and covers the services trade, as I mentioned, will that necessarily mean that this trading activity is going to go back to London? These firms have already set up subsidiaries, and what is the benefit to them reallocating again, right? Is there going to be a lot of cost efficiency from removing all the progress that has been made to secure European trading volumes as they have done for Brexit? Nevertheless, we'll only see how this unfolds and see whether this volume is going to be sustained. I, for example, actually have started a module at my university called the Economics of the European Union and Brexit. And on this topic, I posed a question to my lecturer asking about just what kind of regulation might have underpinned this, how Amsterdam has surpassed London in terms of European shares trading. He pointed me to these regulations and specifically exit agreement. And I think it'll be something that I'm going to be researching further on. So for sure, I'm going to be talking about this on the podcast in the future, because in the greater scope of Brexit and its relations with Europe, or even just the kind of financial institutions and how the financial sector operates in London, that's what going to change. And it'll be interesting to see. But nevertheless, that is, again, a conversation for a future date to see how this unfolds. Now I'm going to be talking about how Tesla recently bought Bitcoin. Its corporate treasury did actually secure $1.5 billion worth of Bitcoin. And, you have to ask yourself, why? What is the point, right? For example, I spoke with a friend. That friend suggested to me that maybe Elon Musk is capitalizing on the GME hype, on the GameStop, on the Wall Street Bets boys, and how the retail crowd to a certain extent follows him, and that, whatever he tweets can be a market moving event, right? Each one of his tweets. And I would argue that that's not necessarily the case, because when it comes to Bitcoin and, again, the kind of volatility that we see in terms of the price movements that can happen when the retail crowd follows, for example, Elon Musk, can go the opposite way just as quickly, right? So the benefit that you're trying to pose to Bitcoin in terms of Elon investing in that on behalf of its firm, or investment or not, whatever, I don't know what you might call that, him trying to essentially utilize his fan base, utilize these Redditors, utilize retail in general, and the hype which he can produce on Twitter to then flow funds into the Bitcoin, increasing its the size of his corporate Bitcoin holdings. I wouldn't necessarily make that argument, but it's definitely something to consider. Nevertheless, these are only short-term fluctuations, short-term mechanics, as opposed to the kind of long-term consequence of holding Bitcoin, which, again, like I said, companies holding Bitcoin in their treasuries face a certain accounting risk, right? Because Bitcoin, alongside other digital assets like other cryptocurrencies, they're considered indefinite-lived, intangible assets, rather than, for example, like currencies, right? They're cryptocurrencies, but in this, when you look at corporate treasury and regulation there, and accounting specifically, they're not treated the same as currencies. And so any decrease in their value below that, what the company had paid for them, even, a temporary fluctuation can actually force a company to write down the value, take in an impairment charge, which is the name given for this kind of the writing down of the falling value of some of these assets, right? As opposed to currency risk, this is a different type of accounting risk. Nevertheless, it poses that kind of problem in terms of Bitcoin just as easily going up, can just as easily go down, for example, and therefore pose a problem to the corporate treasury of Tesla, for example, on the screen now, if you're watching the video, you can see it. If you're listening to the audio version, I will describe this. We obviously see a massive spike in the Bitcoin price when Tesla, or when Elon Musk announced the news on February 8th or 9th. It was, no, I think it was the 8th. Essentially, the price actually spiked 16% intraday. It's sort of an 16% intraday rally in Bitcoin, up to $45,000, which is actually up 770% from its mid-March lows back a year ago, when COVID was becoming a very serious issue to the financial markets. And so while Tesla's share price actually stands at around $860, it's still up a very interesting 1,700% over the past 16 months. This stock price has been consolidating recently. And the reason behind that, and actually interestingly so, the reason behind Tesla's actions, Elon's actions in investing or purchasing Bitcoin, could be to actually cause a distraction, bit of a smoke screen, a sort of a red herring, I believe is the word, in some of the regulatory issues that Tesla's having in China. Tesla, over the past few years, has been quite successful in conducting its business in China. Even throughout the coronavirus, it was said to have continued its business at least at a better extent, more favored, extent than other firms. And so now with, when it comes to the stock price, when it comes to Tesla's business, these regulatory issues obviously pose a great risk to the company's operations. It's had favorable working conditions, favorable contact with regulators over the past few years, in having its gigafactory in China, in having access to different markets, and it having the possibility to work throughout the coronavirus. There might be problems with that, and therefore problems with the stock price, which, as I said, has been seen consolidating, right? And therefore, like I said, the purchase of Bitcoin, as you probably saw in the news, it was very widely covered. Again, you might argue that it is a certain distraction from some of these problems that Tesla is facing. Moreover, what you can also see on the screen is the carbon footprint of Bitcoin. Again, if you're listening to the older version, I would just describe. The point is that the carbon footprint, of Bitcoin is very large. Specifically in 2019, the electricity consumed was 124 terawatt hours. If that doesn't mean much to you, that is the same as the country of Norway. About 40% that of the UK. And this is at a great clash, for example, with Tesla's sustainable energy, renewable energy, pro-electricity mantra and motto, essentially. Not only the company isn't only focused on renewables and green and electricity stuff, but nevertheless investment in Bitcoin and adopting Bitcoin as a payment for some of its products, which Tesla did also announce, comes at a potential clash in terms of how energy intensive Bitcoin is. And that is to not discredit the potential role that it might have in our future, nor is it to try and bash it for being energy intensive relatively. It is just, again, important to point that kind of interesting contradiction out, and therefore allowing you to showcasing to you essentially how the situation should be taken with a bit of salt when it comes to Tesla's true intentions or what they actually might be, right? But nevertheless, that is what Tesla might have to gain from Bitcoin. In short, I will now move on to the Dogecoin rally, because that's been a very interesting thing. So Dogecoin, for those that don't know it, is a cryptocurrency, and Doge relates to some internet meme stuff, but it's seen an incredible rally recently over the past month, kind of starting at the same time as GME and GameStop and the Wall Street Bets kind of saga that we've covered also. And as you can see on the graph that I'm showing, essentially on January 29th, it saw a massive spike in its price. That was around the same time, if not the exact same day, as the trading halt in Robinhood. So you can argue that there was some money flowing from those assets and these kind of short squeeze things. back into then into Dogecoin, which gives you an idea of the investor base that might be playing with this Dogecoin asset, if you may want to call it. Its market cap as of today, the 14th of February, happy Valentine's Day, is $7.5 billion US. Yesterday, when I spoke to my friends on the same topic, it was $8.5 billion. So it fell quite a bit, but actually, during the first week of February, it saw a massive rally. It pushed its market value above the $10 billion threshold, which is traditionally used to kind of determine whether a stock is large or mid cap, right? So beyond that point, you argue for a stock to be a large cap. So again, this is a bit of like a sentimental thing, but I asked myself and I asked my friends, right, what is fundamentally different, if anything at all, about Dogecoin than is Bitcoin or other currencies, right? Cryptocurrencies specifically, right? What makes this price go up or down? Why should I invest? Should you invest at all? And, it turns out that Dogecoin was started in 2013 as a meme, as a joke, essentially, because anyone can technically create a crypto coin, a cryptocurrency, right? It is a widely available technology. And what's interesting about Dogecoin specifically is that, well, actually, before I go on to that, what's fundamentally different about Dogecoin than other assets or cryptocurrencies is nothing, right? Like I said, anyone can create it. The only difference is sentiment to it. And obviously, it's kind of acceptance in society as part of payment system, or potentially just how efficient a currency, that kind of cryptocurrency is at transactions or whatever. But fundamentally, it's very much the same thing. And so it kind of poses the idea that whatever is driving the prices here is as much a joke as it could be just, some meme, that there isn't much to Dogecoin other than the fact that it's got Doge in its name. And it's pretty absurd. It's interesting to see how this is going to develop. But the problem with Dogecoin is that actually 50% of the float, around 50% of the float, is held by 12 wallets, 12 accounts. So it's a very concentrated market, right? So, the people who had gained from the Dogecoin rally, which is up, I think, 1,000% year to date. I mean, if you can see on the screen, if you can see my screen, sorry, it's really only shot up this past month, and it has shot up an incredible amount. It's worth next to nothing in terms of dollars, but nevertheless, it has shot up, right? And this kind of craziness about cryptocurrencies, not only their volatility, but just the extent to which some of the demand for them is down to memes and sentiment and, public opinion, really. It kind of also then poses the question, how are central banks and regulators going to approach this topic, right? Because how can they regulate it? Can they make stable coins? Should they be able to control it? There's a lot of questions flying about. But as I mentioned, stable coins, that is something that regulators and authorities are working on, right? Because you cannot argue against the growing importance of cryptocurrencies and specifically the, I guess, presence that they'll have in the future economy. I think it's going to be because of their efficiency and the growing kind of efficiency as per transactions of cryptocurrencies as opposed to more traditional fiat currencies. Again, their biggest unique selling point is that they're not a fiat currency in terms of them being completely decentralized, right? With a fiat currency like the dollar, euro, or the Chinese renminbi, essentially whoever has the printer for that fiat currency controls that currency and also the money flow. And so, for example, when it comes to the dollar, I think it's used for about 70% of the world trade, and it comes from the Federal Reserve in terms of that is where the control over the dollar stems from. And so, for example, as well as some of the US authorities in terms of policy, such as embargoes, and essentially the dollar can then be used not only for internal domestic purposes when it comes to monetary policy, right, printing, and that is expanding, and then alternatively closing in the money supply. It can also be used to basically retaliate against other countries when it comes to international trade. Like I said, embargoes and different policies. I forgot the specific word that I was going to use. Sanctions. That's the one, right? But that's only because the US, for example, when it comes to the dollar, has the monopoly over money. But here, if it comes to cryptocurrencies, that is the case is the complete opposite, right? And so regulators are trying to create their own, for example, stable coin. So there is an idea for the digital dollar and the digital version of each currency, which would have the technology of what we see behind Bitcoin and Dogecoin, even that being utilized for stable coins. And what makes it stable is the government intervention in that it would be pegged to, for example, the dollar, right? One digital dollar would always equal one dollar, right? Normal printed money dollar, whatever, cash dollar. Alternatively, it'll be interesting to see how that evolves, because again, when it comes to cryptocurrencies, now people, as the world is going to move on to this kind of more data-driven, tech-heavy world, not only is there going to be a lot of public opinion and sentiment driving which currencies or which cryptocurrency is going to be used, it's also going to be dictated by the amount of computing power that people have. And even though I'm not a big technology nerd, I know the extent to which computing power matters in the world of cryptocurrencies. Specifically, the more computing power a country has, I think especially over a certain cryptocurrency, if a country can possess 51% or more computing power, it can actually, to a certain extent, control the ledger specifically of that cryptocurrency, right? So this kind of, therefore, this idea is pushing, much like with the arms race or the space race or whatever race, is pushing countries to, as quickly as possible, develop quantum computers and create as much computing power as they possibly can, right? Because the world is slowly moving into crypto, slowly or quickly. It's been quite abrupt over the past few years. And even though the price, again, like I said, it can be affected by memes and stuff not so as important or as quickly kind of closely correlated with its specific usability and sentiment when it comes to that specific cryptocurrency, it is nevertheless making a presence. So that's what we have covered today. This podcast is being uploaded much later than usual, the video cast as well. Nevertheless, if you would wish to see more of this type of content, check out my other episodes of World Wild Economy on this YouTube channel or on the Spotify or whatever it is that you're listening or watching to this, or listening to or watching this. But for that, if you're I was also going to say, if you'd like to check out some of my written content and in-depth articles as it pertains to monetary policy and macroeconomics, check out investingintellect.com. Without further ado, that's it. That's the end of the show. Have a great day, evening, morning, whenever you're listening to this, and goodbye.